Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
Okay, here we are at the S Fund. If you notice, we had a strong push up for this week, but at the same time, we're looking at a bigger picture. But when we're done talking about the weekly time frame, I'll show you the daily contracts, or sorry, the daily movement of this candle, and you'll see why I might still be in this mindset of a downward movement. Now, currently, this candle was a really strong candle. Great, great, great. But it was barely enough to keep us off of this line here in our indicator at the bottom. Um, I do see it going up a little bit more, but only to continue a downward movement. So we can probably see a push up from where we currently are to close this gap at about 2064, 2065. And then I see a continuation down. That continuation down, I can see it going to at least our demand zones, but I really want to see. And this, when I say I want to see it go down, it's because I know I'm going to get better profit the further down it goes. So that 1700 area, I would like to see it go there, then jump back into the the S fund at that point. Currently, if you want to play it for the dailies, if you want to play it for the daily, this is the reason I'm really saying it's going to continue downward. In the daily, we have this movement down, which created a gap. Then we have now going up. Let's see, get rid of this. So we had our move down. We currently have a move up. If it goes from here to here, this looks like a bearish flag to me. I would then see it going down to approximately the 1850s, minimum 1850s, and that's in the daily time frame. So if you want to play it for the daily for your S fund, yeah, you got a couple more days for it to go up. I'm not going to play it for a short term. I'd rather play it for a long term game. So I will not do anything until I see a clear bottom. Currently here, I do not see a clear bottom. This does not look like a V-shaped recovery or a push to the upside. To me, it looks like it's going to be a bear trap, and the bear trap's going to happen around in this area here. I don't want to be around that area. Now, if I'm playing options, it's different, but currently, this is for my TSP, so I'm not doing anything. I'm staying in the G fund currently. Now, with that being said, let's go to the C fund. In the C fund, we currently are looking approximately at the same thing. All right. So if we're going to continue this way, I thought we were going to hit down here, right? Go up, bounce around a little bit here, then go up some more. What happened actually? Well, this didn't happen. So let's get rid of it. We're currently breaking to the downside, going up. And if you notice here, we have a gap. So let's see if this gap is going to tell us something in the daily time frame. And this is the main thing. If you're looking for big moves, you want to look in the weekly time frame. You're looking for smaller moves, you're looking for the daily. But you know you only can move your money around so many times per month. So that's why I wait for confirmation. Okay. This gap here is still valid. This one here we can get rid of. You see in the daily time frame, it is already filled. So we have a gap to the upside to about 5403. That 5403 would line up with this top part of our Bollinger Bands and the bottom indicator. So let's think of something else. What else can we do to confirm things in the C fund? Let's do a Fibonacci retracement. So if we do a Fib retracement, going from the top here to the bottom of our movement here. So these, remember, they're not 100% lined up exactly, but these zones are, oh man. So I want you to pay attention to this right here. If you have never used Fibonacci retracement, it is a very good tool to use. Where is my there you are. Right here is telling you you're going to get to the 0.50 if you fill this gap here. Now 5.0 and 618 are areas of very big reaction if you use a Fibonacci retracement. So at the most I will see it coming up to that 54.49, but maybe it'll go to 54.50 or 54.60. These are areas. So this area is already marked out with a gap. If it gets to the 50, that means it's going to be a strong movement to the downside. Okay, so nothing is in stone, but now I have an expectation because I already thought, and I see I'm in a downtrend. This downtrend currently is having a push to the upside. So the trend is down. I'm having a retracement up to an area here where I'm most likely going to have a follow through back to the downside where there is a gap. And there are areas I'm looking for it to hit. So after that gap, we got 50.27, we got 49.54. If those are broken, 48.41. Okay. Now until I see this break, that 618 with this 54.49, if I see it break that with strong volume, hey, look, I'm in for the buy. Love it. But currently, I'm looking for it. The C fund to continue down. So let's look at the international fund. All right, currently on the international fund, we are looking at the same thing, weekly time frame. If you notice, they all look almost exactly the same. International fund isn't looking too hot either. We had a strong push in volume, biggest volume for a long time, back since October. So if that's true, if we're going to get a follow through, then we want to see a weekly break of to know it's a push up, you want to see a weekly break of this $82.11 area, only because this is the last area stopped at 1-2 times. If it breaks that with good volume, hey, great, I'm in for the buy. If not, I'm just looking for it to break down again. Now in the daily time frame, let's see if we have any information. In the daily time frame, this looks almost exactly like the S and the C fund, a downward movement with a push up. If this continues to the upside, once again, I'm loving it, but we still have gaps here. We have another gap here to the upside. So if these gaps get filled on the way up, then of course 82.17, that's why I would look for it to go. Until I see these volume, I need volume. I need a lot of volume up. The volume's going down, but the price is going up. Not a good look. So until I see good volume in the right direction, what closes above these current resistance, I'm good. I'll wait. So actually, I can change some of these because they were put down at other points. There we go. So currently, let's see where it goes. But I'm not looking for it to go up, but so far, it's a game of patience. Be patient and you can win. If you're rushing everything, you're probably going to lose a bunch of money. So we got some more. Let's go to our aggregated bond fund. In our aggregated bond fund, we are currently looking at a pullback. Now this one's looking bullish. This one's looking bullish. I'm in the G fund, but I'm going to tell you something. I might get back into this because I was in this. I made a nice little percentage in it for a hot second and got out. I got out like right here, and I was like, let me just wait. Cause I saw this candle, and I was like, it ain't looking too hot. So let's see if we turn on our. Yeah, we're still in a buy zone coming up. Yeah, we got the hundreds. Oh, the 200 week moving average is all the way at the 104, and then our last area is about 106. So currently, even if I did the daily, let's see, daily time frame, I'll be at the top. I did my pullback. I want to see if I'm going to get a little bit more of a pullback, and then I would wait for a push up. But it may just bounce around for a while, so I can wait for this too. So that's it for this week on the TSP Funds and Stock Shots. I'll see you next week. And remember, we also have another segment in the exchange for some non-TSP stocks and options. So see you there if you want to check it out.